Thank you for tuning in to another edition of the Vulcan Report. I do appreciate you tuning in. Not a lot has been happening this week in trading. I don't know how long this video is going to go, but I just really want to cover some basic things here with the in-play Vulcan Report. The in-play Vulcan Report basically is a spreadsheet that I've come up with. The spreadsheet encompasses all of the detail that you would find in a chart, okay? So that you don't have to flip through dozens of charts. The Vulcan Report is there so that you can take advantage of everything that you need right there, the information you need to get in and out of the market, where to buy, where to sell. So that's pretty much what it is. And what I've been doing is I've been refining it, been working very diligently so that even the most novice trader who is new to the markets can read it and understand it. I've even taken the liberty to color code sections of it so that it just jumps out at the page for you. I want to also say to new subscribers and new traders also, you're really going to want to take advantage of the interactive spreadsheet. Not only do I do a video to talk through the spreadsheet, but when I upload the spreadsheet to Google Docs, you have the opportunity to leave questions, and I will come back and I will answer those questions throughout the trading day. Some of you may have a particular question or a particular security that's listed on the spreadsheet, or just a general question, and I do monitor that chat portion of the Google Docs for the interactive spreadsheet. So if you leave a comment or a question, I will get back to it before the market closes and answer your questions. I try to do it as real time as possible. I will keep it open until the end of the trading day. So as you know, I'm busy trading throughout the market hours, so I don't always have you can't always get a hold of me right that second, but if you leave a comment or a question, I will respond to it. That's the quickest way to get an answer. If you leave just a comment on my video, that's cool, but if you leave a question on the video, I might not get get that response and be able to respond to that right away. The quickest way to do it is to click on the interactive Google Doc, and it'll take you right to the live chat, and you'll see a lot of people in there viewing the spreadsheet at that moment. And it's not an active chat as far as traders speaking with each other. It's really more so of a place where you can ask me a question during the market hours. That's really what it's for. If people want to get in there and speak with each other, I don't know if you can do that or not. I'm rather new to the whole Google Docs thing, but I'm just trying to help you as much as I can, and to kind of walk you through how to use the spreadsheet. All right. With that said, what you can see here is we've started to do what we did last week. As you notice, all last week we traded inside this bar of September the 3rd. You're looking at the mini Dow futures. Okay. You see, we established the range on September 3rd, and then that week we traded inside of that range. Well, we're kind of doing the same thing now. We broke out for Monday, and now we're kind of like trading inside of the highs and the lows for the week. So we're not trending. If you look at these 4 bars here, you'll see that we are not trending. Okay, we're just having up day, down day. Here's an up day, here's a down day, here's an up day, here's a down day. That's all we're doing. Nothing really to do with that. Again, I developed the system as a breakout trend following system. It's not a day trading or scalping system. It is a trend following breakout system. It is designed to get you in the market on the right side of the market at the right time. It is also forward looking and forward thinking. Just about every bit and piece of technical or fundamental data that you can use is figured into there. The algorithms that I'm running are extremely complex and huge, gigantic. Takes up a lot of hard drive space, and I do a lot. So just let's leave it at that. I don't care what technique you want to talk about. If you want to talk about candlestick charting, if you want to talk about Gann and Elliott Wave and Fibonacci retracements and looking at astrological signs and looking at zodiacs and I mean everything you can possibly think of, you better believe there's an aspect of my algorithm that takes that into consideration. On the fundamental side, like I've talked about before, everything that you can think about, earnings, jobless claims, all that stuff, Philly Fed, all that stuff, consumer sentiment, every bit and piece of fundamental data you can think of, I have it in there. Commitment of trader reports, looking at options, implied volatilities, looking at the comparing calls and puts and open interest. I mean, everything you can think of, I have factored into that. So, without further ado, let me walk you through how to get into the system. Let's go there. All right. First thing you're going to want to do is in the morning you want to go to the blog, okay, or at night, whatever. The blog is polescan.blogspot.com. Again, polescan.blogspot.com. And when you come to my main page, it'll look like this, okay? And if you scroll down, you'll see the spreadsheet for the day, and it has the date on it. As you see here, it's September the 16th. This is the in-play report. You can actually touch this right here and play around with it right here, okay? Quick viewing, you can do that, okay? But if you notice here at the bottom, it says to join the live chat room during market hours and to download interactive spreadsheet, go to in-play homepage. See link below. This here is the link below, okay? When you click this link, it's going to take you to this page right here. All right? This is the Google Docs page for that date. All right? As you can see, the spreadsheet is totally interactive. You can play around with it. You can touch it. You can move it. You can even download it into different formats if you wish. All right? And keep it on your hard drive. All right? Whatever tickles your fancy. And I see, like right here, it'll tell me how many people are viewing it at any given time. And if you leave a comment, this right here will turn orange. And then I just have to click it, and it'll bring down what you've said. And you can see someone has questions and comments that are put here. And then I just simply type and respond to it, all right, when I get a moment. The spreadsheet is color-coded now. Let me walk you through it. The first column here is the security name. Before the security name, I will put down the ticker symbol. So like this one right here, McDonald's, MCD, there it is, okay? So if you scroll down, you'll notice that those that are not color-coded are just your common stocks, okay? Those are not color-coded. The light blue highlight is futures contracts. Here's the live cattle continuous. Here's the soybeans continuous. The orange highlighted one here is your ETFs, okay? Those are your ETFs. The purple highlighted one are your commodity futures ETFs, all right, that strictly track the commodity futures underlining, okay? And the yellow highlight is your Forex, your spot Forex, and your gold and silver spot, okay? You also will notice that some of the ETFs are highlighted in bold. Those are the ones that I commonly trade the most, like on a daily basis, that I look at, all right, or that I'm really concerned about for that particular following day's trading, all right. So that's your color codes under security name. The next two rows here are highlighted, all right. This is your pulse wave. Your pulse wave buy is green. Pulse wave sell short is red, okay. Now, let me just make a note here. You see how these are highlighted, both of these rows? If you scroll down, you'll notice that the highlight stops right here, okay? And now only this row is highlighted. From here all the way up, are the ones that are true post-wave signals for the following trading day. Okay, meaning that we could either break up or down. All right, and so you would, for those of you who don't mind selling short, you would place both tickets to buy and to sell short. Okay, when you scroll down, notice how these here are only green. These are in play for long pulse waves. We're anticipating a pulse wave breakout to the upside only. Okay, the downside is not in play. If you notice here, it's clear. It's not highlighted. Likewise, for example, this one here, the DRN, is only in play on a pulse wave to the downside. We're ignoring the upside. It's only a pulse wave to the downside as far as these two rows are concerned. All right. Now, if you flip over to the next one, these two columns here, this one is your positive swing VIX and your negative swing VIX. Note, a positive swing VIX means that a bear market is oversold and is ready to turn to the upside. It also means in a bull market that the pullback is now exhausted and the market is getting ready to resume a bullish course. Okay, that's what that means. Likewise, a negative swing VIX. At a bear market, it means the retracement is overdone and the market is getting ready to resume its downward trend. In a bull market, it simply means that the market is hitting overbought territory. Trend is self-explanatory. If it's a 0 in the column, it's a bear trend. If it's a positive 1, then it's a bull trend. Market depth is your fundamental indicator. Okay, if it's a 0, that means the fundamental outlook is bearish. If it's a positive 1, then the fundamental outlook is bullish. You'll notice that there are times where your technicals and your fundamentals are not in alignment. So DRN, as you can see, is in a bull trend. However, the fundamentals are still negative and have not turned positive. What that means is that perhaps this bull trend is weak or weakening and will soon come into alignment with the fundamentals. Or the fundamentals are soon to change and become bullish along with the technicals. You have no way of knowing except for looking at it day by day. All right, let's look at the next column. The next column here is your resistance high, and the next one is your support low. These are your intraday buy and sell signals when you don't have a pulse wave signal. Sometimes you'll have these intraday signals along with a pulse wave signal. All right, we'll get into that in a moment on how to trade those. All right, let's get into it. Let's use the DRN as an example. This one right here is not highlighted. Now, excuse me, coming into today, you have a negative pulse wave at $46.10, which means you'll be looking to sell short at $46.10. Likewise, you see it's in a bull trend or bull market. However, you also have a highlight here. This resistance high is highlighted, which means that $51.04 is in play, which means that coming into the next trading session, you're looking to buy it at $51.04. However, you're also looking to sell short at $46.10. So you place both tickets. Whatever one gets filled first is the trade you go with. Okay. For those of you who have smaller accounts or are not used to selling short stocks, I would advise you to only take long plays. You're looking for buying opportunities, whether the security is in a bear market or a bull market, whether it's an individual stock or ETF. Your main driver is going to be looking for buying opportunities or long opportunities. Anything you see with a sell short signal, you would avoid that and ignore that. Or if you're already long the security, use that as a signal to get out of the security if those price points are triggered or if your stop loss is triggered. All right, get into some techniques now. Let's do that. Okay, you'll note that let's just take something here. Let's just pick some of these out at random.